how was Christmas? Is your business travelling?
Yeah, we had a fairly extraordinary year last year for all the reasons that we've just talked about, really. But from a trading perspective, it was actually one of our best years ever.
Wow.
That 2020 was year 2 of our 3-year business plan. So lots of things were, previously established to be put in place, come to fruition or deliver, on certain things, particularly, capital projects and the like. So as a consequence of that, we bought online the apartment block down on Ella Beach, and we finished our development at Gordon's, which was, obviously upgrading our home centre business there, as well as, developing a shopping centre that, now houses 21, 22, independent retailers. So all of those things lined up really well for us. It was probably both projects, as always, were a little bit delayed in final delivery, but ultimately they helped contribute to a really strong year last year. Christmas was spectacular in every sense of the word for us, particularly on the home centre side of things. We significantly overachieved against our preconceptions and budgets, to the point where we delivered a record profit for the group.
That's fantastic, and I guess that contrasts with some of the maybe more business to business activity that's been going on in the economy. You would consider your businesses to be effectively essential retail services for ordinary Papua New Guineans. That was what kept you going over this period?
Yeah, I think early in the piece, when the government made it fairly clear, the SOE made it clear about, what was essential and otherwise, it was a bit of a blurred line, I guess, with us. We considered ourselves essential, and to their credit, they supported our continued opening through the lockdown periods and the likes. And that was important for us, for our team members, first and foremost, but also to be there to support, communities and loyal Brian Bell followers at the end of the day, whether it be, to provide batteries or lights or solar or, whatever it might have been, just to get them through, the period of uncertainty. Our business, Andrew, is in 2 parts, as I've probably discussed, previously with you, that, circa 50% historically has come from the corporate accounts and 50% from consumer accounts, certainly in the home centre side of things. That changed dramatically last year, where the consumer percentage grew quite rapidly larger. In fact, the largest percentage that we've ever seen, which meant obviously a fall away from, corporate customers as well, which was, of course, expected. But we were very pleased that whatever we lost from the corporate side was more than made up on the consumer side. So very pleasingly that, there's clearly cash in the economy here, and, we saw the better part of it, spent with Brian Bell.
Are there any particular categories that were stronger performing?
I think all of our categories performed reasonably well. There were some that were better, of course, than others, but I think overall my comment about that would be the value end, as opposed to a category, it'd be the value end of spend. So we've got, the old adage about good, better, best in our range, best being probably the more premium, expensive, types of products in our business. But increasingly we saw a real push toward the value end of things last year. So, everything was about value, across every category, really.
So that's very interesting. So people are still looking for a bargain, but they're still buying if the price is right.
Yeah, very true. So things, and you'd equate it to something like in our business, Fisher and Paykel, from a white goods perspective, is seen as a premium product. Those sales would have really tailored off quite dramatically last year, but brands like Integrity and Star Vision and others, which are more house brands and value proposition, products, they went exponentially well for us.
What about business outside of Port Moresby for you?
Really solid. I was concerned, I think, probably halfway through the year about, whether it was going to be a bit of a 2-speed economy in Port Moresby versus the rest of the country. But pleasingly, Andrew, across our business last year, we had reasonably record growth numbers across every region that we represent. So it was consistent and a strong outcome across the board.
We mentioned briefly two initiatives that you took on last year. One was the apartments, and the other was your Gordon's shopping centre. Are they helping you to diversify your business, or maybe balance the revenue where it's coming from?
Yeah, I think probably balance is probably a truer word, because whilst we do always look to diversify, we've got three sort of core elements to our growth strategy. One is from the core, so the home centre, the trade electrical, the chemicals, and property divisions, of course. The other is potential acquisitions, and the third is startup operations, and we did a couple of those last year as far as startups go. One was at Gordon's, we started up our own garden centre. So instead of seeking a third party lease or company to come in and do that, we decided to do it on our own. We've also partnered late last year with Phone House, and we're doing some concept stores. Well, actually one at the moment in Goroka, where Phone House are establishing a phone operation within Brian Bell Home Centres. So that's another startup venture that will eventually, I imagine, will roll out to other regional locations once we've got the model right in Goroka. But early days, it's doing very well for us. On the acquisition front, we looked at a number of things over the last sort of couple of years, but nothing to date has really come to fruition. Certainly some interest, but nothing to date has been finalised.
So looking ahead to 2021, what sort of year are you expecting, and are there any new initiatives you're planning for this year?
Yeah, there always is new initiatives, of course. New capital projects and the likes. I guess answering your question first, we are expecting growth, so we're fairly bullish with our growth targets. They're just under double digits for this year, but it's buoyed with we see this being a more normal year. What I mean by that is that we're not anticipating that we'll have 3 or 4 months of sort of lockdown interruptions.
Yes.
Therefore, if you normalise that from last year, you'll actually get close to double-digit growth this year. So that's sort of part of our thought process as to why we're certainly aggressive with our growth strategies. The other one is we have recently completed our first stage of building a new home centre in Mount Hagen. So we built a large warehouse facility last year, completed that in February this year, where home centre in Mount Hagen moves out of there into the new building. We demolish the old building and then we'll move out of the warehouse and into the new building. So stage 1 was completed in February. Stage 2, we're undertaking the demolition and reconstruction of the home centre this year. It should be complete by probably mid next year. And so that's a fairly large capital project. The other one is we're likely to rebuild our Goroka home centre business within the next 18 months as well.
Right. So what is driving the growth? Obviously, the economy itself is not growing at almost double-digit figures. So is it about market share, or where are you seeing that growth coming from?
I think for us, it's really about establishing the future. So, the old saying, build and they will come. It's not quite like that. We know that those markets are very solid for us at the end of the day, and the current facilities, have been stretched for quite some time. So the reality is that, we need to, beyond investing in Port Moresby assets, we need to look at the regional footprint and work out, what's the right capital spend in those markets. Goroka and Mount Hagen present, really good options for further growth, particularly given the coffee market and produce in Goroka. And as Hagen draws from a much wider sort of, base, if you like, and 60% of the Papua New Guinean population live in the highlands at the end of the day. So they're sort of two natural fits for, doing something in those locations for us. And I think, having a bigger footprint allows us to invest more in the categories that we have. And ultimately, I think the signs are there that, we'll deliver growth, regardless of the size of the operation that we have there.
Excellent. Is there anything else we need to cover as far as your plans for this year?
I think most of it's probably in that, doing things a little bit better, making sure that our supply partners, and that's probably a big piece of the success of 2021 is going to be, Andrew, is in shipping and supply. So
Yes.
We're already experiencing challenges in China and other parts of the world. There's a shipping container shortage as a consequence of COVID. So all of those elements are pretty challenging to manage in the background, but we've got, significant relationships in place. And while some of those will come under pressure this year, I think the focus on 2021 for us will still be in that value proposition. We're trying to find products and categories that we can reduce our retail price in by getting a better buy, from China or other parts of the world ultimately. And that's our mission for 2021.